The crypto market has turned red. What's causing this? Let's run the numbers and find out. You'll find that this negative price action will give so many opportunities, but you've got to be in it to take advantage of it. The greatest gainers in the past 24 hours: AKT, TON, Injective, Leo, Monero, Tron, Render, and FDUSD. The greatest losers past 24 hours: Audi, CKB, Bonk, Wormhole, Floki, Jasmy, SEI, and LDO. When trading and investing, you need a lot of rules and a lot of knowledge. Rule 446 is particularly important. All markets, and therefore all charts, are intercorrelated and interdependent. Now, how does this explain what the crypto market has just done? Unfortunately, a lot of people don't realize that the main markets control Bitcoin's fate. When the main markets are coming down, such as the S&P 500 futures, the Nasdaq, the Dow, the Russell, it pulls Bitcoin down with it. Many people look to the news to understand what's happening inside the markets. What's happening inside the markets via the news is always something else. It's not predictive, it's reactive. To understand what's actually occurring and why things are happening the way they are, you need to look at the charts. This takes many decades to realize because everybody's just utterly addicted to the news. Instead, get addicted to the charts because the charts will tell you what is going on. But of course, you need a little bit more knowledge in order to understand what the charts mean. For example, when the DXY sparks up, the euro will invert, the Aussie will invert that move, and the gopher, the US dollar or dollar yen combo, will go in the same direction as the DXY or the Dixie. When we look at the fiber, the euro dollar, and the Aussie dollar, that tends to confirm what direction crypto is going. It's really important to look at the Forex pairs, but most people would never ever consider this because this is a pro-trading and investing thing to do. In fact, to get a real handle on what's moving and why, we need to look at the Tier 1, Tier 2, and Tier 3 charts. We just had a look at, for example, the DXY and the indices. The indices and the Forex pairs gave us a really good indication as to the direction of the crypto market. This is the way that you read between the charts. But we must have a look at their structural levels. So let's go over and have a look at the S&P 500 and the Nasdaq structural levels, and then we'll get into Bitcoin structural levels and total structural levels. Before diving into the structural levels, let's just get our bearings on the major charts. The VIX has been coming down. This means the fear has been coming out of the market. That typically leads to rallying in price. But however, if the yields start to spike up and the dollar starts to spike up, that's going to hit gold and that's going to hit Bitcoin. So we must be aware of these things. And you can see oil has been hit quite significantly, as well as the Nasdaq. That's come down as the yield started to spike up. Now, let's look into the top cryptos. What we can see as the major indices and the DXY started spiking and the yield started spiking, it brought down Bitcoin. This is how interdependent the markets really are. A lot of people just look at the news. You need to look at the charts first. The charts will give you real-time news. It's a bit of a shock, really. And we can see right now, this bottom is just getting formed and BNB is seeking to break out of that. If that actually occurs, Binance Coin, the world's largest exchange coin token from Binance, gives us a bit of an idea that risk is back on inside the market. That could create a bit of a retracement, maybe all the way back up to 63.2, but we need to look at structure to confirm these things. That's why you can't just look at a naked chart like this. Oh, very naughty. You need to put its clothes on. You need to put in the lines. Now we have some background understanding of what's been going on. We need to look at the major indices. The major indices, especially the S&P 500 and the Nasdaq, are critical to observe. Let's have a look at the S&P 500. Let's put its clothes on. Now, how do we do that? We just pop on the indicator. We can see that there are three key levels on the S&P 500, the 5203, the 5216 and the 5232 level. We can see that we were getting above the 5203, starting to approach this 5216. We gapped up and couldn't hold the 5232. We didn't come back and reconfirm that as support. Therefore, we were shooting down to the lower level at the 5216, and that's exactly what caught price. What we can see here is simply that the S&P 500 did not hold the 5232 level, but there was quite a lot of interest in it, a lot of buying interest. Let's now have a look at the Nasdaq, and we'll pop the indicator on to see what's cooking underneath the hood. The Nasdaq gave us a couple more levels. We can see this 16289 level. The Nasdaq was coming up, making a pretty good play, but had quite a degree of structural resistance at that 16377 mark. It also had structural resistance at the 16417 and 16421. We saw the S&P 500 just jump up. The Nasdaq went with it, but both encountered structural resistance and both failed to confirm lower, stronger support levels. What did that actually mean? It meant that if it couldn't hold, the meaning was if it couldn't hold the 16377 mark, it was on the way down to 16289. But you can see the buyers came in. It didn't get all the way down, and it's starting to revert, starting to come back up. The stock market is pretty damn lazy. It just doesn't want to move 24 hours a day, 7 days a week like the crypto market. And what we can see here, this yellow line, is actually the S&P 500. We can see that it's sparked up and then decayed down, and it's overlaid on total crypto market cap. You're going to have a lot of commentators out there saying all sorts of reasons why the crypto market fell down. It's all in the charts. Specifically, it's in the intercorrelation and interconnection between the major indices, the fear gauge, the forex pairs, and how that impacts the rest of the market. And we can also cross-triangulate back through the Tier 2 and Tier 3 charts to understand the Tier 1 charts and how they're going to move. But the key is always structure. Let's have a look now at Bitcoin. We know the S&P 500, it closed down. This is exactly explaining that gap up that we saw in the S&P 500. Remember, the stock markets don't trade 24/7. Therefore, they're really slack. And we can look at something like Bitcoin and crypto to understand where the stock markets could be going. It's a fascinating intercorrelation, and one that plays out with great regularity. We can see that as the stock market opened, what happened? Everything sold down. And also, we can see a degree of uptake, but that's not coming into Bitcoin at the current time. Not as much as we would have hoped. For example, when it came down, when the S&P 500 came down, it did this kind of action, which would be this kind of action on Bitcoin. But it's not repaired up to this point. In other words, if Bitcoin was as strong as the stock market, it would already be around here. We're seeing weakness in the crypto market, so we could get follow through across the weekend. Literally everything is dependent on structure. So if Bitcoin is at a lot of structural support, it could take off in this way. If it's under a lot of structural resistance just up here, it could come back and retest and just push itself down. So we need to be really mindful of where the structural resistance and structural support levels are. Let's pop on the indicator. The great thing about revealing the structure inside your chart is that it gives you a forward leading indicator on price. We can see right now that even though Bitcoin came down through levels of structure, that 62,200 mark just wasn't retested. It's sliced because the S&P 500, the Nasdaq sliced, and we know the forex pair sliced as well. And what happened down here, 61,400, 61,200, they simply didn't hold. This puts into play the 59,985 structural support level, and we can see we're currently weak. There is always a bit of a gravitational pull to just confuse so many people. We can come up to these levels and then resume down. A bullish case will be confirmed at about the 61,500 mark, and then we have to contend with this 62,200 level of resistance. Always have your three-dimensional price paths and thinking playing out at all times. If you would like the indicators to these charts, just pop across to ctksmethod.org and you can pick them up there. Let's do a bit of a summary analysis. We know that the major indices and the DXY, well, the major indices spiked down, the DXY spiked up. And what happened as a result? Crypto has been feeling the heat. It's currently under two levels of structural resistance, favoring a lower structural support level at that 59,985 mark. When looking at total crypto market cap, we can see exactly the same kind of behavior. That big kick up in the major indices, that was being reflected through Bitcoin as a potential. And then we saw a decaying on crypto. A lot of people inside the stock market have been convinced it's not a good thing to look at crypto. Having been inside financial markets for more than 30 years, I can say unequivocally crypto is incredible. You can use crypto to determine how yields could be moving and therefore how gold and silver could be moving. Changes in the DXY as well as the major indices. In all, crypto throws an incredible signal, and it's available 24/7. One thing that we have to look at in total crypto market cap, we can see this bit of a weakening. The weakening we were hoping would actually translate into more positive movements, but it really depends on the structure. So let's pop on the total crypto market cap indicator. That will give us a really good understanding of where things are going. As the S&P 500 and all the major indices started to break down, we saw that we lost a structural support level in total crypto market cap, around that 2.26 trillion. There were a ton of structural support levels, and it sliced right through it. And now we can see that crypto hasn't even had the capability to come back and gravitationally get corrected back to these levels in order to do a retest. To confirm a bullish case, we literally need to get up to that $2.234 trillion mark and above. If we can't slice through all of this structural resistance and confirm it as support and then get through that $2.234 trillion mark, crypto will remain under negative pressure. I would always suggest that you keep your eye on the top alts because they can give an indication if Bitcoin is starting to turn around or continuing on with weakness. Specifically, BNB will indicate if people are coming back into the crypto market to buy. And when you look at something like XRP, it's broken down even further. Doge has broken down even further, and SHIB has done the same. This is pointing to weakness inside Bitcoin, but this can turn around really quickly. So that's why you need to keep your eyes on the structural levels of all of these charts. The good thing to remember in terms of weakness, weakness is what we look for because we want to get in when it's weak, and as it starts to repair, really hit it. Or if you're DCAing in, dollar cost averaging in, you can dollar cost average in at reasonable levels. And if you're bourse hogging, wow, today is going to be the day, and potentially across the weekend as well. All the structural levels on the Tier 1, Tier 2 and Tier 3 charts are available from ctksmethod.org. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.